For investment that I just got the quarter four investor report for the investment that I made with Lifeafar. So in today's video, I'm going to give you guys an update on how that's going now that we got 4 quarters in. Stay tuned.
I just got that money swag.
I'm going to start this video off by going through an email I got from Lifeafar for the Q4. Attached, please find the Q4 investor report for Urban Heights. Please note the following items we would like to bring to your attention. As part of our goal to improve performance of all existing investments, both operationally and for the long-term value, we will be hiring an external property maintenance company during the first and second quarter of 2020 to complete an assessment of each property. This assessment will allow us to more accurately plan for current and proactive maintenance, enable us to improve the overall property performance by utilizing a capital expenditure budget. That's just a fancy way of saying Q1 and Q2 are going to be very expensive because most likely as an investor taking this in, because they're hiring an external company, which means that external company is probably going to charge a premium than what we're paying now, because not only are they doing the repairs, they're keeping data on the repairs to generate a report on the repairs. So there's probably going to be a premium charged on all the repairs for the first 2 quarters. And unfortunately, they're probably going to charge a fee for generating this report. I kind of don't like that because first, the property isn't old. It's only less than a year old. So how much info do you need from these people? The property's been running for a year. The homework was supposed to be done on the front end from running this property, but we're less than a year in and we need additional outside sources to come in and help out and generate reports and that kind of stuff. Property's less than a year old. You guys were supposed to do your homework on it. So to me, I don't like that because Q1 and Q2, I got a feeling they're going to be less because they're probably going to charge a premium, like I said. And you guys didn't plan for capital expenditures in the budgets. I kind of don't like it because you're telling people 10% return, but according to this email, you guys didn't even really plan for capex. So as we continue, previously communicated as of year-end 2019, we have not included depreciation in any of the dividend payments. We'll begin doing so in 2020 to fund the initial capital expenditure budget. All accumulated depreciation from 2019 that was not distributed as dividends will be utilized for the capital expenditure budget. And going forward, each project will have a small percentage of those funds withheld to maintain the capital expenditure budget. The exact percentage will be determined on a property by property basis after the independent assessments have been performed. So this independent company is going to come out and give an assessment, and they're going to take the money out of our dividends. I don't appreciate that as an investor because the dividends, I'll leave that to the end, but I don't appreciate that as an investor because it sounds to me that you guys didn't plan properly. So I feel like that should come out of the 15% property maintenance fee. It shouldn't come out of the investors' pockets. I feel like that should come out of your pockets because when you guys were selling us on this information, you were selling it to us in a way that you had a plan. I mean, other people who have invested, you can chime in, and people who are interested in investing, let me know if when you watch the videos and stuff, you feel like if you've seen any of the decks or anything, they have a plan for the property and the property's been properly planned for. This property's less than a year old and they're already hiring an independent company to come in to manage for what's going to end up being close to a third of the time the property's been in existence. So how well did you guys plan? I don't know. Hopefully I can get a little bit more information in the specific report for Urban Heights, which is the project I'm invested in. They're going to start taking out 7.5% taxes out of our dividends, which is cool. You got to pay the tax, man. We're going to get our tax reports for us investors on March 15th. I kind of am so on that. As a person, if you invested as a person, that's perfectly fine. But for somebody who invested using a company, I don't know if there's anybody who did it that way. If you invested using a U.S. LLC, you have to report your taxes by March 15th. So you're going to have to ask for an extension, which is no big deal. But this March 15th thing could mess some people over. It doesn't affect me, though. Let me see. Now I'm in the individual report. Q4, cash on cash ROI was 0.4%. Annualized is 1.6. Don't like that at all. And then I'm going to skip to this part. Additionally, as we mentioned previously, we are in the process of making significant adjustments to our financial reports, beginning with the profit and loss statement. As you may recall, we have been working on transitioning from a cash-based accounting system to an accrual-based accounting system. We are doing this in order to bring our accounting practices in line with the International Financial Reporting Standards, or IFRS. By switching, like if you switch the accounting method, it's basically going to like break the expenses up and spread them out more evenly through monthly expenses. But this is like the third time they changed how they're accounting, and I don't appreciate that. It's actually kind of like the fourth time if you count how they're going to take depreciation out of our dividends now. That's like the fourth time they changed the this is gonna be like the fourth time they changed their accounting and financial reporting practices. Like one time from quarter one to quarter two, they actually took money out of our quarter two dividend to account for expense in the quarter one. And they said, oh, this is a change in how we're accounting, blah, blah, blah. And then with the dividend thing, that's another change. And then how it was when I first was investing, that's what I'm counting as number one. And then now you're changing from a cash-based system to accrual-based, which is cool. But this is the fourth way you change how you're maintaining the financial reports. And as an investor, I don't like that. That kind of stuff worries me because IFRS has been around for a while. Like cash-based, like accounting isn't really that like prevalent nowadays in companies. Most companies use the accrual-based method, so I'm pretty sure they knew about the IFRS standard. I would have liked a little bit more information on why they were doing it that way at first, and now they're switching it to this way. That would have helped me ease my mind as an investor. I'm just giving you guys my thoughts as an investor going through the paperwork. Okay, booking activities, mostly from Airbnb and Booking.com, which surprises me. I thought it would be a lot through the Lifeafar website because they do a good job of marketing their stuff. Average daily rate, this is something they're going to have to work on. December was $40.34. The average daily rate in Q4 was $40.51. The average daily rate since the property became fully operational is $28.25. So that's good. That's going up, trending upward. Let's see. The summary. So year to date Q4, 16,830,911 pesos was for all 4 quarters. So let's see. So year to date, that was just for quarter 4. Year to date, all 4 quarters is 118,365,625. So that's what it is for the whole year. They let you a little bit know about the competition. We're doing better than the average daily rental in Bogota, which I could see that because probably lots of people come from the U.S. Probably know about Lifeafar and they see a Lifeafar product. If they're interested in Colombia, they probably know about Sam and all that kind of stuff. So I can see people paying a premium to stay here. Currently, there's 83,918 shares available for 79,800 pesos. So if anybody's interested, there's a way to get into the investment. Let's see. But investors have like first right of refusal, so I would have a right to buy it before one of you guys would. So that's the email that I got. It is currently February 17th. Still haven't got my quarter 4 dividend. Haven't got a report for January yet. So I don't know what's going on with that. So I still haven't, I guess because of the year end stuff is why it's taking so long. Basically, doing the math based off of the Q4, how much it ended up. Like this year, I'm going to get like 2% or so return on my money. So I don't really appreciate. I won't say I don't like that because I was told 10% going in, and in a year I'm going to get like 2%. So year in, hopefully next year it improves, but a year in, return on my money I'm getting like 2%, like in the twos. So I don't really appreciate that. That's not something. That's not why I got into it. You tell me 10, and I'm getting 2. You're changing the way the accounting's getting measured. I don't really like that. Uh, I really don't see. I really don't see how we're going to improve revenues because of the market and that kind of stuff. Because Q4 was just real bad. For December, that was really bad. It was like 1.3 mil or so. So that's kind of tough. And for investors, I'm just giving you guys a look at how it just comes. If you're investing in this kind of stuff, hands-off investment, it kind of just hits you, and it's nothing you really can do. They're changing the accounting standards. They're bringing these outside people in. This is what happens when you're a solid investor. You kind of just gotta just roll with the punches. The staff at Lifeafar is great. They help me get my visa. If I have any questions, they get back to me. I deal with a guy named Santiago. He's the best, really. He's really a good dude, but just number wise, it's just not working. But if this is probably like a good way if you want to get a visa, become visa eligible, investing in one of these projects would be, I think, a good idea. But just for a pure investment play, no. But if you wanted to like maybe get a visa, I think it might be a way you get a little dividend return. Get your visa plus get a couple dollars. I think that might be cool. Hands off if you don't want to start your own business. You can qualify for like an M6 visa. The name changes, but I think when I did it was called an M6 visa. So there's that. Also, what I would like to see is don't take the money away from the investors. You guys didn't plan for CapEx. That's not an investor thing. So that should come out of the 15% they charge to manage the property. How you guys going to charge 15% and then like the accounting standards you're not doing, you're changing that, and then you guys didn't properly manage the books for capital expenditures. I don't see how that is an investor thing. I don't see why that's coming out of the investors' returns. You guys are charging 15% to manage the property, and to me, part of property management is managing the cash flows. So how are you going to charge 15%? And I didn't see anything in there about them taking a discount, but the investors got to take a discount because you guys didn't manage properly for capital expenditures, or you guys didn't do the research on the market or on the property, because you guys are paying an independent contractor to come out and do some stuff, and it's only been a year, less than a year, because it started Q1. So less than a year, bring an independent contractor. They're going to manage the property, do the maintenance and stuff on the property for 6 months. So that's going to be like over a third of the time the property has been in existence. This other company's been doing the maintenance and managing. I don't like it. I feel like that the extra money shouldn't come out of our dividends. Shouldn't come out because you're going to use the depreciation to take away from us. I feel like they didn't manage for capital expenditures. They're the company who came to us, investors, when they were looking for capital for it. I got in when the property's like almost done. When they were looking for capital, they're telling us 10% return. We're very far away from the 10% return, and yet we're expected to take another discount. Like, we're supposed to take a discount when you guys are making 15%, regardless of what's going on. I don't think that's fair. I think that's something they should look at. I met Sam. He personally seems like a cool guy. I know Sam's probably not personally involved in what's going on at Urban Heights, and I see they try and market it on the YouTube channel. It's been on there a few times, but if this property is so dramatically underperforming to what you guys projected, I didn't come up with 10%. If you told me it was a 3% return, I would have probably invested in another property. But you guys telling me 10%, that's why I picked this one. It was 10% in Bogota. So I figured they could charge a little bit more because it's in Bogota, and it's a little bit more expensive cost of living wise. But you guys told me 10%. We're getting 3% as investors. And probably even, depending on when you got in, you're getting like 3% on your money, and you guys can't take a discount, but we have to. I don't appreciate that. I just feel like if it was me, I would have at least met in the middle a little bit. Hey, we didn't plan for capital expenditure budgets, so we're going to knock down our property management fee from 15% to 13%, or 15% to 12% or 10%, something like that. If you wanted to meet us in the middle, we're going to drop it down to 13%, and then we're going to take some money out of your dividends. But just to say you're going to take the depreciation out, I don't know how much it's going to be, but for the investors have to like just lose, and you guys still maintain how much you're making. I don't think that's fair when not planning for capital expenditure is kind of like a big deal. So that's me. That's my 2 cents on it. If you guys have any questions, you guys know I try and answer as many questions as I can. So if you have any questions personally about Lifeafar that didn't touch in the video, this is just Q4. This is how I got the Q4 report. So somebody who is investing, I want you guys to see how the business gets done. As a solid investor, you don't really have any say. I didn't ask any of us if we wanted this to happen. They just went ahead and did it. So you're kind of at the mercy of Lifeafar. So that's for good because they do good rehabs and stuff, but it's for bad. Well, not really bad, but like for the most part, if you're a solid investor, you know, you're just a capital investor, you didn't really invest any time or anything, you're gonna have to adjust to whatever the company you put your funds into does. So what I learned is if somebody tells me 10%, I'm gonna expect 4%. And if I do get to 10%, that's good, but I'm gonna say what I invest willing to get 4%. I wouldn't, those projections don't really mean anything. So this is Nick signing out. That's my take on Lifeafar. I know this is a longer video. Thank you guys for watching, but I wanted to give you guys an in-depth, like kind of raw look at what's going on as an investor. And because I know there's not too many videos on it when I was looking to invest. So hopefully this video helped somebody. And if it did, give it a thumbs up, subscribe, and any questions you guys have about my experience, that's all I can speak on is my experience. I'll be happy to answer your questions. So this is Nick signing out. Thank you.